Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm James Thomson, senior Chanticleer columnist at the Australian Financial Review.
And we are
The Money Café.
Good to see you again, James.
Yeah, I don't know. Can't say Happy New Year in February,
no.
but I'm saying it anyway. Happy New Year, everyone.
And did you have a good Christmas?
Terrific Christmas. Yes, I sort of didn't work for the best part of 4 weeks, so it was great. And it was so quiet, didn't really feel like I missed anything, and then came back to Trumpageddon in my first week, which has been great fun.
It is.
Oh, it's I've read all this tariff stuff's obviously is fascinating, but all the Elon Musk stuff is incredible as well. Like, he's just the stuff he tweets about how he's ripping through government services in the US, basically seemingly making fairly unilateral decisions, apparently with a team of 6 college kids.
I know.
Sleeping on the floor.
They're like teenagers. And he's got control of Treasury's payment system, apparently.
Yeah.
And he's kind of unilaterally cutting people off.
Yeah, it is absolutely bizarre. I mean...
Yeah.
And I've sort of seen this argument around a bit. I wonder what you think about it, that they're just doing what they said they'd do. I sort of get the thrust of that, but in some ways that's not true, because Trump said he would do tariffs, right? He announced them and then backtracked literally within 24 hours. Like, and there's no great concessions out of the Mexicans or the Canadians. And they've agreed to put 10,000, from what I can see, 10,000 people are at the border anyway, are going to be at the border.
That's right. They've agreed to do what they were going to do anyway. That's right.
So I think it's really, people sort of, people interpret Trump as they want to interpret him through their own sort of lens. It is amazing.
I've been writing about it in Intelligent Investor, my weekend briefing, and being accused of having Trump derangement syndrome.
Yeah.
I don't think I'm deranged about him. I mean, if anyone's deranged, it's him. But I mean, look, maybe not. Some people would say it's a breath of fresh air, I guess.
Yeah, and look, there's a lot happening. There's a lot of action, but he hasn't really delivered on anything that he's promised. I mean, except for Musk and this government efficiency thing. I mean, there's no tariffs yet. There's no deregulation of really anything.
Well, the Chinese tariffs were going to be now.
Yeah, they've started.
So they've started.
That's
10%.
True, yeah. But they're not 60% as promised, are they?
No, but it takes... Well, that's right. He's promised 60%. But he has increased... The Chinese tariffs were about 13% on average.
Yeah.
And now they've gone to 23%.
Yeah.
So that's still a decent tariff. That is a decent tariff on Chinese products. So I don't know.
And I mean, look, we're 2 weeks in, and no other politician would have shaken things up this much in 2 weeks. So he's got that going for him.
You've written a column about it for Chanticleer. Tell us what you said in there, because it was a reasonably broad comment.
Yeah. Look, I mean, my concern. I think there's a price to be paid for this. There are 3 prices to be paid. I think there's a price to be paid on markets. Markets have no idea what's going on, and that stalls decision making. I mean, think about this. Let's say you're about to do some whiz-bang deal in markets. You're a manufacturer and you're going to buy another manufacturer, or a miner and you're going to buy another miner. There's just no way you can do those deals at the moment. The level of uncertainty, you don't know what's going to happen next. So markets will have to live with that uncertainty. They'll have to put a risk premium on most things, on lots of things. They're still working that out, I think. But that's not a great state to be investing when markets are already stretched and crowded and over-positioned. Trump's going to have to be an absolute genius to keep the stock market going up under those conditions. I think the other price is monetary policy. There's no way the Fed can... I don't know if you listened to Jerome Powell, the Fed chairman, last week in his press conference. He didn't want to mention Trump by name. I guess that's polite. But he's basically saying we've got no idea what's going to happen. Well, they've got less idea now So what's the safe thing to do? Keep rates high. So if you're banking on a rate cut, that's another price. And then you've got this geopolitical cost. You know, every allies, friends, foes of America are now going, what's going on? And again, that slows down decision making, particularly for an economy like Australia's. We're so trade exposed, we're so small, we need free trade. And we've got the opposite now. So, I mean, I would just say, you know, if you think this is sort of a bit amusing, a bit funny, a bit of a breath of fresh air, like, be careful. Be careful what you wish for, because chaos is not a state that the world thrives in.
Yes, well, we've certainly got chaos.
Yeah. And it's by design, right?
Yeah, that's right.
It's what he wants.
He's creating chaos deliberately.
Yeah.
And it is going to have an impact on all those things you mentioned. I think you're right. Yeah.
Yeah. Do you have any idea where it goes next?
No, of course. No idea. I mean, I suppose that the uncertain thing economically, the uncertain thing is the main thing is what's going to happen with tariffs.
Yeah.
Is he going to do the tariffs?
Yeah.
Because the whole program before the campaign, during the campaign, was he loves tariffs. He's going to do tariffs, right? So, and the impression you got was that it wasn't particularly transactional in the sense that he was going to use tariffs to get a deal done, which is what seems to have done now.
Yes.
But he was going to do tariffs because he thinks they're good.
Yeah, yeah.
And so
this balance.
my impression was that his attitude was that tariffs are like a GST on imports. So it's a focused GST on imports only.
Yeah.
And he saw it that way.
Yes.
And he was going to do that. That was kind of the way I saw it. And I'm not sure that's true now, but it's impossible to know.
No, yeah. And really, he's backed off at the very first sign of a bit of, you know, retaliatory pressure. I mean, was it the market that forced him to back off? Was it, you know, some of the adults in the room? I don't know, but...
Well, there seems to be only one adult in the room, and that's Scott Bessent, the Treasury Secretary.
Yeah. We haven't seen much of him in the first 2 weeks, have we?
No, but he's presumably talking to Trump.
Hopefully,
I don't know.
Yeah. Anyway, I mean, it's just one of those. I think we all expected it to be like this, but even this is. We all expected a certain level of chaos, but even this was unpredictable. Like, you know, the idea that the US would rip up its foreign aid policy like overnight.
Just cancel all foreign aid.
Yeah, it's just amazing.
I know.
So there's going to be repercussions for this, but again, I don't think Trump doesn't really seem to care.
No.
But look,
what else are you looking at? What else is going on?
I mean, just one other thing to mention. We've got a few questions about DeepSeek, so we'll cover that there. But reporting season starts next week, and Commonwealth Bank is on Wednesday. So we sort of start with the grand wahoo of the Australian market. Commonwealth Bank shares are up around $160. Yeah. No one can really explain why. I think it's just a massive result to watch. And this is a seriously good bank run by a seriously smart group of people that rarely put a foot wrong, probably with the exception of just before Christmas where they changed those account fees and got rightly hammered for it. But yeah, I mean, I think the lens they have over the broader economy, it'd be interesting to see every 6 months for the last 2 years or so, they've produced stats on how different age cohorts are spending and saving. So can't wait to see all that sort of stuff. So,
yeah, that's always good.
Yeah.
Yeah.
So yeah, I'd just say keep an eye on reporting season. It's hard to do with trumping, but it's worth monitoring because the Australian market similarly is at record highs for sort of inexplicable reasons.
Yeah, but for different reasons to the US.
Reasons,
I mean, the Australian market is at record highs because the banks are expensive.
Yes.
Mainly.
Yeah.
In the US, it's the technology.
Yeah.
We haven't got many technology companies.
No. But it's as in the US, everybody knows these banks are overvalued. As in the US, everybody knows the tech companies are overvalued, but their run doesn't stop. So It's just something to watch this year, I think.
I think we should get on to questions so we can talk about DeepSeek.
Yes.
Because there's a few questions to begin with about DeepSeek. But before we do that, let's have a quick word from our sponsor.
Think investing is out of reach? Think again. Fund Later lets you earn a $10,000 portfolio with just $4,000 up front. Fund Later will lend you $6,000 to fast-track your investment journey, and you can repay it in monthly installments that include a facility fee. There's no waiting, no margin calls, and you can choose from 3 professionally managed portfolios. And here's a bonus. Open and fund a Fund Later account in January or February, and you'll get free access to InvestSMART's online bootcamp course, valued at $99 to sharpen your financial skills. Visit fundlater.com.au to learn more. Terms and conditions apply.
Okay, let's just run through the questions.
Yep.
On DeepSeek. Now, Jess says she loves the podcast, excited to be back. I have a real female question, a listener question for the podcast. Okay. Because Stephen Main actually complained about the lack of females questioning last week.
The females have answered him this week in a spectacular way.
We have tons of questions from women. It's great. Thank you very much. This week you spoke about the rise of DeepSeek in the AI space and the flow on impacts to the global economy. Any tips for how to invest in AI-related companies outside of the big US tech stocks? Kath says, you asked your female listeners for questions, so in return for a wonderful podcast you provide, here goes. Question, from your collective work experience, knowledge of the business, why is it and where is likely headed with AI? What's going on? What should an ambitious teenager be learning today? Hugh says, what is DeepSeek? Give us more basic information on AI. And is there one more?
Yeah, there's one more from Brian there.
You read it.
Brian says, do you think the reason Elon Musk and others are getting behind Trump and anti-immigration parties around the world could be that they are worried that AI and robotics would lead to a new age of slavery? It seems to me that rich countries continuing to benefit from cheap labour provided by migrants would be a barrier to sales of Musk's Optimus robots and self-driving taxis. Creating a supply shock in the labour market could make spending 20 grand on a robot seem quite attractive.
Oh.
There's a conspiracy theory for you.
Well, I did write a piece for the ABC on Monday, in which I did propose that really what's going on, well, one of the things that's going on here is that companies are dreaming of a new era of slavery.
Yes. You love the robotic slaves, don't you?
Well, no, I just observe. I'm just kind of noting the fact that what we're talking about is free labour.
Yeah.
Right. I mean,
you're right.
Free in the on games. You got to pay for you got to buy the AI and probably subscribe to some extent to it, but you're not paying human beings.
Yes.
And human beings are a pain in the neck. You got to not only got to pay them, you have to give them holidays.
Yes.
They have sick leave.
Yes.
And they are governed by fair work commissions or whatever, regulations about how you're supposed to treat them.
Yeah.
And, you have to have DEI policies. You can't, if it's a female, you cannot do anything that's sort of, anyway, sexual.
Got to treat everyone
So you got to treat it. So with AI, none of that happens, right?
Yeah.
So companies are very keen on having AI to replace human beings.
Yes, I totally agree. And I think this is the thing from last week. We should answer Hugh's question. So DeepSeek is a large language model. It's like ChatGPT, which is a application where you can go and give ChatGPT prompts. And sometimes those prompts are in the form of questions like, what podcast does Alan Kohler appear on? And it'll give you an answer based on what it's scanned off the internet. DeepSeek does a similar thing. It claims it's been developed in China. It claims to have been developed faster and cheaper than ChatGPT and other similar models. But they're all doing a similar thing. They're consumer-facing AI that helps you.
So it's worth just noting that what DeepSeek announced before the market got a big fright about it, and knocked off $1 trillion off Nvidia's share price. They announced they had a reasoning model.
Yes.
DeepSeek had previously announced an inference model in December, and what they announced in January was a reasoning model. The difference between inference and reasoning is that inference is simply the application of an algorithm to data and just kind of taking the next step. Reasoning is much more like the human brain, and there's much more abstract details and so on. ChatGPT has also got a reasoning model. And DeepSeek has done that. Subsequent to all this announcement, a lot of people are claiming that they've actually plagiarised ChatGPT's model.
Yes.
Another interesting thing to note about DeepSeek, which I found fascinating, is that ChatGPT, which is owned by OpenAI, and also a lot of the other large language models, have been using the NVIDIA's H100 chip.
Right, yep.
Which is the new chip, and it's really expensive, but it's really good, right? But the thing is that Biden imposed a ban on China buying the new NVIDIA H100 chips.
Yeah.
And that meant that DeepSeek had to use the old NVIDIA chips.
Yes.
Which aren't as good.
Yes.
And they're much cheaper. And so what that meant was that they had to come up with ways of getting around or making it work on the old chips.
Yeah.
So whereas OpenAI and everyone else have been raising tons of money and spending millions and millions, hundreds of millions of dollars on NVIDIA's new chips, DeepSeek had to get by with the old chips.
Yes.
And so as a result, they came up with it. They did it, right?
Yeah.
Using the old chips. And they announced in one of the papers that I read that the cost of training this model was $5.576 million, which is a fraction of what it costs everyone else, right? And so everyone's gone, oh, Christ, they've done it. So this is China doing what China does, which is to come up with something that's cheaper than everybody else's.
Yeah.
And so, it seems to me that if it's cheaper, it's going to catch on faster. More people are going to buy it. If it is, is it that much cheaper? Everyone's kind of querying now, calling bullshit on a lot of what their claims are, but I don't know. But it is definitely cheaper.
Yes,
right? It's definitely cheaper.
Yeah.
And that seems to me, even though it's probably going to knock off the value of a lot of these other AI companies,
it accelerates the development of AI.
It's going to accelerate it.
Yeah. And so that gets back to your idea. Do we get towards AI replacing humans a lot faster than we thought?
And I say yes.
What are the implications of that?
I say yes to that.
Yeah.
I mean, clearly
we got this question from Kath about what should an ambitious teenager be learning today. I've been thinking about this for the last 2 weeks. I don't know what the answer to that is, because there is a chance, it's not, I don't want to be too doomsday here, but there is a chance that by 2040, 2045, this AI has got so good that lots of people in the workforce are not needed.
Sure.
Lots of people. Not just like some on the margins, but like lots, particularly white-collar, university-educated people are not needed. That's where this is going. AI, you only get the big returns from AI if it wipes out lots of jobs. It's the only way it proves its productivity benefits.
Well, so and the one thing you shouldn't do is go into computer coding.
Yeah,
because that's one of the first things that's going to get taken over by AI, and in fact, it is already.
Yeah,
it's being taken over. So I reckon that the job to go into is to be an electrician.
Electrician, yep.
I mean, something in construction.
Yep.
They're developing robotic bricklayers, so probably not a brickie.
Yes, maybe.
I reckon electricians are going to be hard to replace with robots.
The other thing for me is aged and personal care.
Yeah.
We're going to need lots of that. Some of it will be done by robots, but lots of it won't be able to be done by robots.
A lot of it will be.
Well, I think you could imagine, I think it's a while before we have physiotherapy, physical therapy done by AI and robots. So I think that's look, I might be totally wrong. I just wanted one thing from Kath, who's asking about what should an ambitious teenager do. I saw a great video on CNBC with Mark Cuban, who is not only the owner of the Dallas Mavericks, but a sort of famous internet. He said, if I was a 16-year-old, what I'd be doing now is going around and teaching for a fee all my friends, all my fellow 16-year-olds, how to use ChatGPT to further their studies. And then I would take that service to small businesses who will take a while to catch up for this. And there's a great sort of side hustle in teaching people how to use this technology. And I thought, that's pretty bloody smart. And then maybe from doing that, you figure out the next path to take with AI. So there's a bit of help for Kath.
Yeah, I think that's fair enough. I mean, I think one of the skills we're all going to have to learn is how to use these things.
Yeah.
Because I'm using them all the time, but I'm not very good at it.
Yeah, you're not
I'm
pushing
scratching the
boundaries.
surface.
Yeah,
I'm just kind of I'm asking these AI models, whether it's ChatGPT or Claude or Perplexity, a question rather than searching for something on Google.
Yes,
because it's easier, and but then you've got to check it.
Yeah.
So look, it's sort of
just back to Jess's question about AI outside the big US tech stocks. I did look. There's several AI ETFs, AI and global robotics ETFs. Yes, there's a lot of US tech stocks in them, but there are a lot of tech stocks from all over the place. So the one I looked at, and I'm not recommending this in any way, but Global X's AI ETF had everything from Samsung, lots of Japanese companies, lots of Taiwanese companies, lots of European companies connected to AI in some way. And look, I think this is a big challenge for investing. It's very hard to see who wins long term. But that might be a way to try and get access to a bunch of companies that will win.
There are a lot of these AI businesses that are competing with each other, and I think they're going to compete away their margins
quite possibly
to some extent. So maybe the best way to go is to invest on the periphery of it into data centers, which are going to be needed, and also energy. A huge amount of energy is used by AI, so maybe to go on the edges of it.
Yeah, maybe.
That way.
Yep. That'll certainly give you a bit more geographic diversification too. You don't just have to invest in the US. There's
a company based in Israel that's listed on the ASX called Weebit Nano.
Right.
I mean, I've spoken to them a few times, and they've got they're doing a chip that they are trying to compete with NVIDIA. I mean, I've heard there's been a bit of kind of stuff that's lately that they're a bit dodgy, so I'll be careful. But you can also invest in companies that are developing chips. There's an Australian company called Brain Chip, but I don't know much about them.
No, I don't think that's going overly well at the moment. But,
okay.
All right,
very good.
Well, lots of deep sea questions. I should just mention Lynn's was more of a comment than a question. She said you asked about why women are not submitting questions. Well, we're listening to the show. We love it. We're too busy multitasking with our job, home, kids, elders, especially during January when the kids are full-time, to stop and send in a question. She says, how about doing an update on women's status in the economy and the listed company space, gender pay gaps and all that sort of stuff? That report is due out in a couple of months, Alan, so we'll come back to that and bring you the update on the pay gap question. We got lots of flack for doing it last year, but I think we'll definitely do it again because it is important stuff. Did we? Well, I think I got questions for about 6 weeks asking what I had against men. Anyway, we'll look forward to... We will do that again, Lynn.
Okay.
Do you want to do Rob's questions?
Rob says there are approximately 55,000 employees working in the Australian superannuation industry. In 2023, Australians paid over $32 billion in fees to super funds. 10-year average super fund returns for high growth for 8.5%. What's VDHG?
I think that's
Is that a super fund?
I think so, yeah.
For example, 10-year returns around 8.5%. With Australia's housing crisis and critical labour shortages in many industries, should the government nationalise the super industry and direct the fees saved into converting all the now vacant office blocks into our CBDs into a mix of housing and retrain all the shiny bums in submariners, chippies, nurses, chippies, nurses, fruit pickers, etc., all industries that are crying out for more employees? So that'll make a discernible difference to society, says Rob. Well, there's quite a few questions in there, aren't there?
It gets back to that AI thing, right? Will we need fund managers when AI can do it all for us? I'm not sure. Maybe a couple, but if you had a team of 10 fund managers, do you just need 2 to oversee the AI and the rest of them can go retrain?
Yeah.
I don't know, but we're not nationalising the super sector. Super needs competition. These super funds need to compete against each other. We don't want one big government-owned thing. I don't.
You're
think so.
you're poking into a favourite topic of mine.
Yeah.
Which is that super fund competition is really hard to work because they're not competing about something that's in existence now. They're competing about future returns, which you don't know.
Yes.
Right. So it's all about the returns you get for your life, for the rest of your life, right?
Yeah.
And you can't actually compare them because it's talking about the future. You don't know what they are.
Yep.
So it's impossible to compare them. And so you end up either going randomly into a super fund because you like the look of them or because they've had a decent returns in the past, which is fair enough.
Yeah.
But as they always say, past returns are no guide to the future returns. And so you end up going into them randomly or you get put into a super fund randomly and you end up with what you got at the end. When you retire, here's your sum, and your friend, your neighbour, has gone into another fund and they've ended up with 200,000 more than you, right?
Yes.
In retirement.
Yes.
And how's that fair? It's not fair. Right? It's crazy.
So nationalise it. You're with Rob.
I am.
Nah, I'm not with Rob.
Nationalise it. Well, have one.
You're only looking at there. You're only looking there at one part of the puzzle. You're looking at the bit about building up the stack of money. The most important bit, the thing that super is designed for, is spending the money.
Oh yeah, well sure, but
so there's different levels of service. They should be competing on service.
Oh yeah, but it's all about the return. Come on. It's about the return. Anyway, look, I agree. I accept it. I agree. It's never going to happen.
Yeah,
we're going to end up with all these different super funds, and it's all going to continue to be the case that we randomly go into a super fund and we've got no idea what we're going to end up with, and what the return of that super fund's going to be. And I accept that that's the way it is.
Fair enough.
But as for, I think the other thing about that Rob's talking about is converting vacant office blocks into accommodation, which sounds great in theory. The trouble is that offices are not built to be apartments.
Yeah.
They've got one central core where the toilet and kitchen is, right,
Yep.
in the middle, and then there's all this space around them. And apartments have to have, each apartment has to have a toilet and a kitchen, right, and a bathroom. And so converting offices into apartments is a nightmare.
Yeah, it's
really difficult.
Yeah.
My daughter is an interior designer who's engaged in some of this stuff.
Yeah.
She says it's so hard,
Yeah.
it's so expensive
Yeah.
that, you end up with, it costs so much to do it, you end up, the cost of the apartment is too high.
Well, Elon Musk is ordering us all back to the office anyway, so maybe they won't be vacant for much longer. John says, I'm a long-time subscriber to Intelligent Investor and I've run my own super fund for many years. I get that the Aussie dollar struggles against the US dollar, but I cannot get my head around why the Aussie dollar is not holding up against the pound and the euro. Can you give we listeners a 101 refresher on this, please?
Go ahead.
Please. Well, I think at the moment the US dollar is very strong because of the tariffs. So the US dollar is strengthening because there is anticipation that the tariffs will bring inflation. Inflation will either keep rates high or push them higher. And so the US dollar, that makes the US dollar more attractive.
And also currencies, any country that introduces tariffs, or any country that introduces tariffs, the currencies tend to adjust to offset the tariffs.
Yeah.
Which means that the tariffing country's currency goes up.
Yes.
It's not simply a calculation about the possibility of inflation and higher interest rates. It's also an adjustment about the tariffs themselves. But anyway, go on.
Yeah. The weakness against the pound and the euro, I think, and Alan, you might have a different view, reflects our exposure to China. So currency traders are concerned there that China will be hit by the tariffs and the Chinese economy is generally weakening. that will hurt Australian exports, and so the Australian economy will grow slower. The dollar comes down against the pound and the euro.
Yep. That is absolutely right. There's also an element of flight to safety.
Yep.
Of money going into the US dollar simply because of the geopolitical chaos that's going on, which is, caused to some extent by the US itself. So ironically, the chaos that's caused by the US causes a flight to safety into the US.
Yes.
But also into Europe and the UK and other bigger countries. And that tends to, and Australia is seen as more risky.
Yeah.
So there's just simply an element of flight to safety.
Yep.
Okay, David says, if the RBA decides on a rate cut in February, how long is it reasonable to expect to see this reflected in your variable interest rate? Is it a situation of needing to be a squeaky wheel to see any movement, or will the banks likely cut their variable rates as soon as it announced?
They will cut their variable rates within milliseconds, well, probably within hours, of the RBA's first rate cut announcement. But, Alan, I am interested to see what happens with the RBA's second rate cut announcement and the third rate cut announcement. It has been a long-held theory of mine that the way that the banks are going to restore their margins is to not pass on a full rate cut. So say that RBA cuts the second time in, May, 25 basis points, 0.25%. Do they pass on 15 of those basis points or 10 of those basis points, trouser the remainder, and boost their margins back up? Possible, probably political suicide. So that's the anger of politicians and the public.
Oh yeah, but they're not politicians. They don't care. They'll go for. I think you're absolutely right. They will restore their margins.
Really? You think they'll not pass on one of the rate cuts?
Well, not pass on in full for sure.
Oh, there you go.
And as for whether there'll be a rate cut in February, the market is saying 93%.
Yes. Are you willing to accept that my long-held prediction is now looking good?
Oh yeah. I mean, there is, my long-held belief that they wouldn't cut interest rates in the first half of this year is wrong.
Yeah.
I accept that.
Do you know what though, Alan? I'm going to be right for the wrong reasons, and you're wrong for the right reasons. Your theory is they shouldn't cut. I don't think. I think unemployment is too low. The labour market is too tight. They might live to regret any cuts.
Yeah.
Particularly if there's a tariff war. The Fed is not cutting. Imagine the furor if the RBA cuts and then has to raise again.
Yeah, I know.
So I think the smart play would be to sit on your hands, but I don't think that's what's going to happen.
No. Well, I've never seen the Reserve Bank go against
defy the market,
defy a virtually 100% unanimity among economists in the market.
Yeah.
So I think it's absolutely a done deal.
Interesting. Yeah.
Chi Yen says, I'm Taiwanese, just recently got to Australian citizenship after 10 years of trying, and yes, I'm a lady.
Yeah.
I'm interested in listening to the Money Café, and I find it curious that the questions are dominated by men. Anyway, 3 years ago I purchased some shares in a West Australian company called VYS.
Visan, yes. Well, I have done a touch of research
Visan,
here.
okay, so Chi Yen, James has researched this and I have not, so go.
Okay, so Visan, it's actually quite an interesting company with an interesting idea. So it's trying to get into the water management area. So based on two things, that the Pilbara is going to need a heap more water because all the mining projects up there need water and the water infrastructure is not great. And then that the East Coast is going to need to replace heaps of its water infrastructure over the next X years. It's going along okay. I think the earnings were up 47% in the last year.
What do they do?
So they do consulting, they do water testing, they help companies try and organise this stuff. The two things they sort of pointed out was that mining companies are slowing down their investment a little bit. Does that weigh on them a bit? They've bought this thing, another consultancy in the eastern states called CMP. So look, I've got no idea whether this is a good acquisition or a bad acquisition, Chi Yen, but it's an interesting little company with an interesting idea. So, you are playing in the riskier end of the water pool, and I think you've got to accept that. But they're making some progress.
Okay.
Caitlin says, my boyfriend Tom and I are regular listeners to the podcast. She works in sustainability in the property industry. And as you'd understand, Trump's re-election has a number of people in this space, including myself, concerned. Trump back in the White House, what impact do you think his presidency will have on Australia's climate policy?
Yeah, well, good question. And Trump still seems to think it's all a hoax and a scam.
Yes.
It's the new green scam. He's cancelled Joe Biden's policies. He's pulled America out of Paris, the Paris Agreement. Look, I was pretty pessimistic before Trump became president, pretty pessimistic about the world actually doing something meaningful about climate change and preventing the planet warming up. Yeah. And I'm now much more pessimistic than I was.
I mean, there's a huge backlash against sort of ESG at the moment. I think the market will sort of ignore that. A lot of this infrastructure needs to keep rolling out, right? So, ironically, the increased risk premium that we'll see around environmental and these sort of projects will actually make the returns better. So I think money will keep flowing into those areas. But yeah, look, the transition's just harder and lumpier and more complex and more expensive than we thought. So, but the one bit of optimism I've still got, Alan, is 2050s are still... A lot can happen in 2 weeks. A lot can happen in 20 years. So, we're hopeful of technological breakthroughs over that period. I don't know. I worry with you about the stalled momentum, but I think a lot of this work will continue just because it has to.
Okay, fair enough. I don't think momentum has stalled because there's never been any momentum.
Yeah, fair enough.
And I think the main thing that governments and individuals and investors have to do is get ready for the planet to warm up.
Yeah.
So whether you believe in climate change or not, or whatever you think is going to happen is going to happen.
Yeah.
Like 2024 was the hottest year on record, according to the Copernican climate measurement people. The planet's temperature has already gone above 1.5 degrees above pre-industrial times. Yeah. So we've already breached the Paris kind of limit.
So people like Caitlin working in property sustainability are actually going to become more important because they'll have their focus on adaptability.
Yes,
it's going to become huge.
Sure. And that's it. And thanks everybody. Thanks to the ladies for asking us, sending questions in. That's great. Keep it going. We've not dealt with all of them. We'll save them for next week with Stephen. Thanks for listening to today's episode of the Money Café. I'll be back next week with Stephen May, so send in your questions to themoneycafe@eurekareport.com.au. We've got a few left over from this week and we'll use them as well. Until then, I'm Alan Kohler, founder of Eureka Report and finance presenter and columnist on the ABC.
And I'm James Thomson, senior Chanticleer columnist at the AFR. Talk to you soon.